Something wild just happened in the stock market. Nuburu, ticker Buru, saw its stock price explode. On October 8, 2025, before the market opened, the stock jumped over 30%, following an 86% surge the day before. This wasn't a random blip, it was triggered by a major announcement. Nuburu revealed a binding agreement to acquire an Italian software firm, Orbit SRL. This isn't a small purchase, it's a strategic move to transform Nuburu's business. Investors rushed in, driving the price sky high. It's a classic case of a bold play igniting market excitement. Such a dramatic move signals a fundamental shift in Nuburu's direction. We're not talking about a good earnings report, this is a pivot into a new, lucrative market. The acquisition is the key to why Nuburu, once struggling, is now a Wall Street hot topic. A 30% jump on top of 86% is almost unheard of, especially for a company that's been under the radar. The news dropped like a bombshell, catching the market by surprise. Now let's break down what Nuburu and Orbit do, and why this deal has everyone talking. Let's get into it. To understand this deal, you need to know what Nuburu does. Nuburu specializes in high-power blue lasers, far beyond your average laser pointer. Their lasers are used for industrial applications like welding and 3D printing, especially with copper. Electric vehicles, for example, need copper components welded perfectly, something Nuburu's blue lasers excel at. Copper absorbs blue light efficiently, making Nuburu's tech ideal for fast, clean welds in batteries and electronics. Nuburu has carved out a niche as a hardware company, selling advanced laser systems to manufacturers. But hardware sales are tough, revenue is lumpy, and innovation is constant. This context is crucial. Nuburu's hardware model has limits. That's why their next move, the Orbit acquisition, is so important. They're looking to break out of the hardware box. Here's the game changer. Nuburu is acquiring Orbit SRL, an Italian software company. Orbit develops crisis management software for large organizations, including military and defense agencies. Their platform acts as a digital command center during disasters or security threats, helping clients manage resources and maintain operations. Orbit's tech is already gaining traction with major clients like NATO. The deal is structured in two phases. First, Nuburu invests up to $5 million over 3 years, starting with $1.5 million for a 10.7% stake. This lets Nuburu start integrating Orbit's tech without a huge upfront cost. The second phase is a full buyout by the end of 2026, valuing Orbit at $12.5 million. This phased approach gives Nuburu time to ensure a smooth integration. For investors, it's a sign of strategic thinking, not just a risky bet. Nuburu is building a bridge into the software world, one step at a time. This isn't just an acquisition, it's a transformation. The market sees it as a smart, calculated leap. It's about more than lasers now. Nuburu is evolving. Why would a blue laser company buy a crisis management software firm? It's a strategic pivot. Nuburu is launching a new defense and security hub, moving beyond hardware into complete solutions. The global operational resilience market is worth $3 billion. Orbit gives Nuburu instant access. Clients like NATO and the US Department of Defense are now within reach. This deal shifts Nuburu from one-time hardware sales to recurring software revenue. Orbit's platform can be sold as a subscription, creating stable, predictable income. Investors love recurring revenue. It makes the business more resilient. Now, Nuburu can offer both advanced hardware and essential software to defense clients. They're no longer just a supplier, they're a strategic partner. This combination makes Nuburu a much stronger competitor. The company is stepping into a bigger, more profitable arena. To appreciate this surge, look at Nuburu's past. Its stock was down over 50% in the last year. Many investors had written it off, making this week's explosion even more dramatic. The market sees the Orbit deal as a lifeline, a chance for Nuburu to reinvent itself. This is a shift from struggling hardware maker to dynamic tech player. The key: diversification. Nuburu is no longer tied to the volatile laser market. The move into defense software opens a $3 billion market and recurring revenue. Wall Street loves the new strategy, seeing potential for growth and stability. Investors will watch for smooth integration and new defense contracts. Any big software sale will prove the plan is working. The stock's future depends on execution, but for the first time in a while, Nuburu's outlook is bright. The story is just beginning.